Good afternoon. Welcome to the Wednesday afternoon conference call with Trusts Unlimited. This is Jim George speaking. I'm the non-attorney spokesman and facilitator for Trusts Unlimited, and I'd like to welcome all of you to our call. Today is September 13th. We have a lot to discuss here today. The things that we discuss are of interest to you. I hope you will click the subscribe button and share our call with other like-minded individuals. So let's go ahead and get started. First, by way of disclaimer, Trusts Unlimited is not the purveyor of the dinar and these other currencies. We're not advocating either the sale or purchase of these currencies, but as rather substantial currency holders ourselves, we're sharing with you the information we believe to be most relevant. Of course, the most important issue for those of us that do hold these pre-valued currencies is the window for the potential reinstitution of the dinar. The reason I cite the dinar, in our opinion, it's the catalyst for all of the other currencies. I think we're in the final phase here. By analogy, I would say it's like a horse race where we're turning the fourth turn, the final turn, and it's the sprint to the finish line. And that's where we find ourselves today, in my opinion. Now, right now, the dinar, and I'm going to give you a little scenario here that is a possible scenario for the reinstitution of the dinar. We're looking at a CBI rate of 1132. At 1132, or perhaps one more drop to 1,000 is all that would be necessary. And then, of course, with the deletion of the zeros, we'd be looking at a 1-to-1. Once that happens, the black market or the street rate would have to fall into line in order for those 3 zeros to be removed. That would, of course, put the dinar at 1-to-1 with the U.S. dollar, if not at a slight premium over the dollar in country. At that point, the dinar would then float on the Forex. Once the dinar floats on the Forex, it should hit 322, which was the rate of the dinar when it was put in the program rate 20 years ago. It should put the dinar at 322 within weeks, if not days. And in my opinion, the dinar will settle conservatively at around $4. The reason I think $4 would be a conservative estimate for its value is because the strongest currency against the U.S. dollar right now is the Kuwaiti dinar, which is at $3.45. Well, Kuwait, the wealth of Iraq dwarfs that of Kuwait. So if the Kuwaiti dinar is at $3.45, I see no reason why the Iraqi dinar would not settle at $4 or even possibly north of $4. Remember, the rate's going to be a Basel-compliant rate, and Iraq, arguably, per square mile, could be the richest country in the world. So that's the scenario that we're looking at. I can't give you a date, or a rate. I can say that based on the velocity of what's going on, we are, as I said, this is a sprint to the finish line. What I want to do is kind of step back and take a look at the bigger picture to explain why I think we're at that sprint to the finish line. I want to start first with a little bit of a global overview, because that's really what's going on here, the global reset or readjustment of currencies based on internal issues within each country and then against valuations country to country. The global reset is the transition from fiat-based to gold and commodity-backed currencies. In other words, they're going to create a standardized method for valuing currencies globally. Now, this is going to have an impact on basically a Keynesian economic system, which the Western nations have been operating under probably for nearly 100 years. But the standardized valuation of currencies is going to do a couple of things. First of all, it's going to stop currency manipulation. So countries like China, for example, aren't going to be able to artificially devalue their currency in order to corner the global trade market. It also means bad behavior like what the United States has been involved in the last couple of years, massive printing. The printing of money will be based on the gold and other commodities to back the currency. So they're not going to be able to simply print paper based on the quote-unquote full faith and credit of a given country. They're only going to be able to print money if they have sufficient assets to back that money. So that's going to change a lot of things. And since the Western nations have been operating with a Keynesian model, this is one reason why, frankly, they are not completely thrilled with this arrangement either, because while they may not be artificially devaluing their currency for trade purposes, they are printing money, in my view, unnecessarily and creating inflation. Now, the two big winners in all of this are going to be individuals that hold tangibles and commodities like gold and silver, but the biggest winners are going to be people that hold pre-valued currencies. And of those currencies, probably the most important currency for a number of reasons is the Iraqi Dinar. I want to go back even further and try to explain a little bit about what's going on, because the central banks globally are purchasing a substantial amount of gold, and gold is shifting around, which, in my opinion, is undoing a lot of nefarious activity that took place after World War II. It's sort of under the radar, but a lot of gold is transferred from the Vatican to the U.S. Treasury, and a lot of that gold has subsequently been shifted to other central banks, Western central banks, and even into the Middle East. So something's going on for this to be happening. And to me, what I think it means is that they're aware that they're shifting away from the fiat-based currencies. They're aware that their currency, therefore, has to be backed by gold and other commodities. And so the people who, and this is just my opinion, who have been nefariously in possession of massive amounts of gold reserves are forced to disseminate them, if not to the rightful owners, at least to an equitable distribution, so that when we go to Basel compliance completely and go away from fiat currencies, these nations respectively can go ahead and back their currencies. Another issue which is below the radar has to do with the quote-unquote war in Ukraine. There's a lot going on there that is really not discussed, but the Ukraine was a hub for money laundering. I'm not talking about the Ukrainian people. I'm talking about the Ukrainian government, and in my opinion, a corrupt government that's been there since the United States was involved in placing a corrupt government in Ukraine in 2014. But among the nefarious activities there, one of them was the massive money laundering. And I think that's going to come to an end, because despite all of the things that the media is talking about, tactically it looks like the Ukrainian war pretty much is over. I hope it's not going to be used as some sort of a false flag for other agendas, but that's the situation. Now, as I said earlier, individuals in possession of gold, silver, other commodities, and particularly those of us that have pre-valued currencies, are in a very, very good position right now. The currencies to look at are, of course, the Iraqi Dinar, the Vietnamese Dong, the Indonesian Rupiah, even the Iranian Rial. And, of course, that's going to be subject to good behavior on the part of Iran. Unfortunately, the recent deal that the United States made with Iran to basically pay them $1.2 billion per hostage by releasing funds that are being held by South Korea is not a good sign, but nothing this administration is doing makes any sense to me. Then, of course, we have the Bolivar and the Zim. The Zim technically isn't currency, it's a bond, but the leverage with the Zim is huge. So even though the Zim is at the end of my list of currencies that are going to revalue, the leverage is so profound, so large with the Zim, that even if it comes back at a penny, you're going to have a good day there. So that's kind of an overview of what's happening globally. But I want to talk a little bit more about Iraq and something that is critical to the reinstitution of their currency. This is another reason why I say we're at a sprint to the finish line. One of the key issues was safety and stability in country. So I want to just review what's going on. We now know that ISIS has been eradicated in Iraq. The Iranian militia are gone. The Shia, Sunni, and the Kurds are working together, and they're sort of eliminating all of the sectarian problems. Sadr seems to be very satisfied with what's going on. There's no more threats of protest. There is a protest in Kurdistan having to do with the payment of salaries, and there's a little foot dragging going on there, but not with regard to the monetary reform, and that's what's critical. Now, Maliki and the coalition framework have basically been neutralized, and that's critical as well. The U.S. ambassador to Iraq released a statement saying that Iraq has finally achieved safety and security. The U.S. Assistant Secretary of Treasury is meeting today with the board of the CBI. Delegations from the EU and Saudi Arabia are meeting with Soudani, the CBI, and al-Habussi this week. And a large contingent of U.S. troops remains in Iraq in order to assist and to ensure that the safety of the nation remains intact. Lastly, Soudani is scheduled to speak at the UN on September 20th. Now, in terms of geopolitical issues, Iraq is not a player globally, but Iraq is going to become a player globally, which is why, in my opinion, I think that Soudani is slated to give a speech on September 20th. In my opinion, basically what he's going to be saying is that Iraq is open for business, that Iraq will be a hub for East-West trade, and of course, in order for any of that to happen, Iraq's going to need a global currency. So everything that we see happening can only be happening through the prism of lifting the country out of a program rate and reinstituting the currency at a Basel IV compliant rate. Now, Soudani also gave a speech on Monday in country. He made a number of announcements in that speech. He said they're going to establish a new cabinet. They're going to stop the money laundering in the Bank of Mosul. They're going to be rebuilding the Baghdad International Airport to ensure that it's going to be an import-export global hub. They're going to be building a new railway and trucking infrastructure. Iraq will also be a financial center for the Silk Road Initiative as well. Now, the United States, China, and Russia have all signed memorandums of understanding with Iraq. Now, those memorandums of understanding have to do with international contracts for the infrastructure of Iraq, for trade, import, and export. Now, these contracts cannot be consummated at a program rate. It can't be done. Now, right now, the official rates in Iraq is 11.23. The street rate is 13.20. But in my opinion, all of the players in Iraq are working with Iraq based on an agreed and unannounced internal exchange rate, whether it's an individual rate or whether it's in a sliding scale or parameter. For example, 322 to 385, something of that nature. The memorandums make no sense if Iraq can't keep up its end of the deal. The other issue is, while the HCL has not been officially implemented, all parties have agreed upon the basic terms of it. So when you put all of this together, it's crystal clear, in my view, that none of this can proceed at a program rate. I don't think that Sudani is going to announce a rate on September 20th. And frankly, we're so late in the quarter, I don't want to see any change until October anyway. But I do think that in the speech, it will be pretty clear what's about to happen. And again, I think that's why he's been invited there, because there's going to be a massive global ripple effect to the reinstitution of the dinar. It's going to affect other currencies globally. It's going to affect the global transition from fiat-based to commodity-backed currencies. It's going to affect East-West trade. It's going to affect import and export. The Bank of International Settlements now, with the transition fully to Basel IV and V compliance, is going to change the way they zero out all settlements globally. So, I mean, we're really at the threshold of something, and those of us that have purchased currencies, particularly the Iraqi dinar, and have been patiently, although to be completely honest about it, there are times when we've been rather impatient, and understandably so, but patiently held on to these currencies are the ones that are going to be the most richly rewarded for this transition. Now, when Trust Unlimited got involved with I'll call it the Dinarian movement, we knew that most Dinarians were hardworking, middle-class American people who, for the first time in their life, were going to be faced with the daunting task of managing a substantial amount of wealth. And so we decided to put a program together to assist you. Phase one, the initial part of that, is the establishment of your family asset protection trust package. However, when we established this package, we were unaware of the shift that was going to take place in our own country, the high tax, high surveillance, high regulation state that's been created over the last few years. Hopefully a lot of that can be undone, but we have no guarantee of that. So the package that we put together to assist Dinarians, in fact, has as much application for every American citizen for a number of reasons. So I want to walk through our trust package with you. First, there are a number of entities individuals can establish in order to manage their assets and provide some level of asset protection. Individuals can establish sub-S corporations, LLCs, family limited partnerships, things of that nature. Now, those entities do provide some level of asset protection, but primarily by dividing business assets from personal assets. Of course, the dinar is a personal asset. In addition, those entities are all statutory, meaning they're regulated on a state-by-state basis, which means the state will be aware of the internal workings of that business. Unfortunately, courts have ruled that these entities, sub-S corporations, LLCs, limited family partnerships, owned in the majority by one or closely held group, can be pierced for civil litigation. So at the end of the day, they don't even provide the asset protection you need. The single best bulletproof entity for providing privacy and asset protection is a package of irrevocable trusts. Absolutely, positively, unequivocally, there's no argument there. Now, if you don't want to set one up for any given reason, that's fine. But if you go to a reputable firm that knows what they're doing and you say, I want the best asset protection available, a self-settled package of asset protection trusts is the only entity that you would want to establish. And these are the reasons why, whether you're a Dinarian or not. By establishing this trust package, you're going to preserve your privacy and your anonymity. That's because the assets within the trust package are sealed and cannot be pierced unless an individual can go to a court and show cause that you have committed a fraud. Short of that, this information is not available to anyone. Secondly, by avoiding this trust package, and particularly if you're dinarian, you're going to avoid IRS scrutiny when the currencies revalue. If, for example, you were holding these currencies in direct title when they revalued, the IRS computer would probably spit out an audit. And with the potential magnitude of this revaluation relative to your prior year's earnings, you're probably looking at a full-blown 6-year audit. Now, such an audit would be time-consuming. It would certainly come along at a very bad time because these currencies just revalued, and the last thing in the world you want to do is to have to spend a lot of time providing documents to the IRS. And third, the cost of our asset protection trust package would be less than the cost of a 6-year audit. But most importantly, by establishing your trust and assigning your currencies to the trust, there's less than a 15% chance of an IRS audit once these currencies revalue. But even if the IRS determines to do a 6-year audit or just a regular audit, they can't do a 6-year audit because the only taxable event within the trust package will be the revaluation itself. There's just nothing else to audit. The third reason you'd want to establish this trust package is if you plan on gifting currencies to family and friends. Now, if you're gifting to individuals that you have no problem giving the currency to exchange for themselves or giving them the U.S. dollar lump sum after you've negotiated the exchange, that can be accomplished outside of a trust with a standard gift letter. But if you're hesitant for any reason to give these individuals the post-RV lump sum, you can gift those currencies to them through our specially designed gift subtrust, which is part of our package. And because you've established this gift subtrust pre-RV, you're going to be able to avoid the federal gift tax, but you will also be in control of the post-RV proceeds, meaning that you can manage the money for these individuals, invest it as you deem appropriate, and distribute it to them as needed. The fourth reason you'd want to establish this trust package, and by the way, let me step back for a second. This gifting through the trust works very well in order for you to maintain control. For example, you can gift the use of business entities, cars, homes, boats. You can gift the use of these things to individuals, but you still retain ownership and control through the trust. Now, the fourth reason you'd want to establish this trust package is because it's structured in such a way as to allow your estate to bypass the cost and delay of probate and the federal estate tax. Probate is a process that ordinarily can take anywhere from 6 to 18 months. But because it's a public disclosure process, the general public would be aware of the size of your estate, who your heirs are, and how much they each stand to inherit. So if anyone feels they have a legitimate claim against you, your estate, or your heirs, they can simply file that claim with a probate court. And that could tie the estate up for years and even decades. And your heirs will have either limited access or no access at all to their respective inheritance until the probate process is completed. Then there's something called the federal estate tax. This is the tax that the federal government would assess in order for that estate to be transferred to heirs. Under current law, approximately $10 million of that $25 million or that estate would bypass any federal estate tax, but the balance of that estate could be taxed as much as 65%. Now, this scenario is not only unacceptable, it's completely and totally avoidable. By establishing your trust, not only will your estate bypass the cost and delay of probate, but no one will know who your heirs are, how much they each stand to inherit, and your heirs will have immediate access to their respective inheritance. And the federal estate tax will be zero, saving your heirs as much as 55% of your estate. The fifth reason you'd want to establish this trust package is for some very specific asset protection benefits. And if you're a Dinarian, this is critical. One is pre-RV, one benefits post-RV. Pre-RV, this trust package will allow you to circumvent something called the Uniform Fraudulent Transfer Act. Now, what does that mean? Under our system of civil procedure, you can only be sued for what you actually own in direct title or the value of property at the time you transfer it out of title to an entity like our trust package. So let's say hypothetically you bought 5 million dinar for $5,000. Transfer the currencies to our trust. They subsequently revalue for $25 million. You begin to live a lifestyle more reflective of your newfound wealth, and a couple of years down the road, someone decides that they want to sue you. Well, this prospective plaintiff has a couple of problems. First, he or she better have a very strong case and very deep pockets because this trust has been structured away in such a way as to make it extremely expensive and extremely time-consuming to pursue civil litigation. But second and most importantly, once a prospective plaintiff learns that pursuant to the Uniform Fraudulent Transfer Act, the only thing they could win by way of a civil award would be $5,000, the value of the currencies at the time you transferred them to the trust, and none of the post-RV value of $25 million, there will be no lawsuit. Now, post-RV, there's a benefit I like to refer to as limited liability stop-loss. This protects you from future bad acts after you have acquired this wealth. This protection is accomplished through a legal strategy called segregation of assets. This is why we've established a package of trusts. This is why it's the best asset protection available, and this is how it would work. Once again, we'll use the same example. Purchase 5 million dinar for $5,000, transfer the currencies to the trust. They subsequently revalue for $25 million. Now that you have $25 million in trust, you decide to make some purchases. So you purchase a larger primary residence, a vacation home, perhaps a half a dozen rental properties for tax write-off and additional cash flow, a couple of cars, a boat, and maybe an RV. But as you purchase these items, you place each of them in their own separate subtrust, which constitutes the package. Now, how does this protect you from future bad acts? Well, let's say one day you're driving one of your new cars, you have an accident, the accident is clearly your fault, and tragically someone is seriously injured or even killed. Well, the family of the victim is going to want to sue you. But remember, civil suits are about monetary awards, and you don't legally own anything. So the plaintiff would be left to sue the owner of the car that you were driving. Well, who owns that car? One of your subtrusts, of which you are merely the beneficiary. In that scenario, the car insurance carrier will negotiate an out-of-court settlement with the victim's family. You will not be involved in those rather unpleasant negotiations. The car insurance carrier will repair or replace your car, making you whole. And this is important. All of your other assets and net worth are safely protected in the other subtrusts. Why? Because under the law, those separate subtrusts are separate legal entities or persons having nothing whatsoever to do with the accident in question. Therefore, the plaintiff would have no standing to pursue them. So this package of trusts work very much the way a commercial barge would work, where all of the valuable cargo is stored in a series of small compartments. Why? In the event that any compartment is ever breached, the only potential loss would be the cargo in that one compartment. The cargo in the other compartments is safe and secure due to the firewalls, and the barge will never sink. Now, these benefits are lost to you whether you're a Dinarian or not if you do not establish your package of irrevocable trusts. Now, our trust package was authored by our attorney, Robert Bly. I've been a practicing attorney for over 40 years, specializing in the areas of estate planning, asset protection, and offshore planning. I myself hold degrees in political science, macroeconomics, and finance. I've worked in these areas for 40 years myself, and I, along with my clients, were personally involved in the reinstatement of the Kuwaiti dinar in the early 90s. So between the two of us, Robert Bly and I have 80 years experience in this precise area, and I frankly know of no firm that can make that claim. Now, under our system of civil procedure, it's when you hold assets in direct title that you can lose control of them. And unfortunately, it's when you need control most of all that you can lose such control. If you've lived for any length of time, you've either experienced in your own life or through friends and family things like unexpected divorce, permanent incapacitation, the onset of dementia, premature death, and prolonged and complicated probate processes. Then there are investment losses, business losses, and bankruptcies. The number 2 loss of wealth in the aggregate, courtesy of the information age, is identity theft. But the number 1 loss of personal wealth remains confiscation through civil litigation. So anything that you own in direct title can be taken from you. So the only way that you can manage, protect, and control everything at all times and in all circumstances is through the establishment of a package of irrevocable trusts, and particularly if you have an asset like these currencies that you're anticipating a substantial increase in value. And we at Trust Unlimited will do everything we can to help you accomplish your personal and financial objectives both pre- and post-RV. Now, the things we've discussed are of interest. I strongly suggest you contact us to get our initial no-obligation package. It does contain everything you need if you wish to proceed with the establishment of your family asset protection trust package. But again, you're under no obligation to do so. The package has a lot of information about us, about trusts, about the currencies. You can review the package, contact us by phone or email if you have any questions. We'll be happy to assist you. There will be no consultation fee. But if you decide to proceed, once again, everything you need is included in the package. I want to give you our contact information. Actually, let me go to the Q&A, and then I'm going to go ahead and give you our contact information. Now, if you would like to get our initial no-obligation package, you can certainly go to our website, which is trusts with an S, unlimitedllc.com. But to get the package quickly, you should contact us by email or phone. Our email address is trusts with an S, unlimitedllc@gmail.com. That's trusts with an S, unlimitedllc@gmail.com. Or our phone service, which is 307-274-4122. Contact us by email or phone. Request our package. You should have it within 48 hours. You can review the package. Contact us if you have any questions. We'll be happy to assist you. If you submit an application for the trust along with your fee, you should have your trust certainly within 5 days and probably within 3 days. If you're going to make this decision, you might want to make it sooner rather than later because, as I said, the way things are moving right now, this may be a sprint to the finish line, and you don't want to miss this opportunity. So I'm going to go ahead and go to the Q&A now. Our first caller is area code 209. That's 209. Go ahead.
Hi, Jim. This is Sheila in Oklahoma. I have
Yes.
a quick question. Maybe you've addressed this before, but I was just curious. A lot of people are talking about, waiting for a 1-800 number, going to a redemption center. What is your opinion? Do we just go into a bank once it hits the Forex? Can you give us some insight or what you think will happen?
Okay, there are only a certain number of banks that have the computer capability to not only exchange international currencies But especially when you have a situation where the currency revalues, the rate is it fluctuates, minute to minute. So they're going to have to be able to go in and see, literally, when you're sitting there across from them at the desk, what the rate is, which is different than what it was 20 minutes ago and different than what it's going to be 20 minutes later. So, I think this is going to be a lot easier than people think. I hear all these things about contract rates and NDAs and all this stuff. To me, that's nonsensical. You're going to go to the bank. You're going to have proof of ID. You're going to have proof that that you purchased the currency. You're going to have your invoices. You're going to have the currency. You're going to negotiate the exchange for a street rate, and that'll differ slightly from bank to bank. Once you've negotiated the exchange, the USD will go into the trust bank account that will be established, assuming you have a trust bank account that will be established that day at that bank. You want to make sure that the deposit slip doesn't have a 10 or 20-day hold on it, because they shouldn't be able to hold your money for that length of time. For individuals that have purchased our trust, one of the supplemental documents that comes with the trust is a document called the Exchange Protocol, and it walks through the entire process of the exchange. What you take to the bank, what you don't take to the bank, what you tell the bank, what you don't tell the bank, what is the bank's business, what's not the bank's business. And in certain situations, you're better to just walk out of the bank. It's hard to do when you're sitting there, knowing that once you negotiate this exchange, everything's going to change in your life. But you can't let the banks take control, because that could not end well for you.
Thank you. I appreciate that clarity.
Sure. Bye-bye now. Our next caller is area code 619. That's 619. That's got to be Eddie.
Hey, Jim. How are you? Good morning.
Okay, Eddie. How you doing?
Yeah, you know what? Just a little grayer and a little older, buddy. But I'm doing well.
Tell me about it.
Those mirrors never lie. They'll tell you the truth, So
I don't look anymore. I just walk on by.
Hey, I got up from my desk when you were talking a little bit about the Zim, and I caught the very tail end of it. Could you just kind of go over that again? What you're hearing?
The Zim is a peculiar. I don't want to say currency. Technically, the Zim is printed on bond paper, so I guess they could call it a currency, but it's on bond paper, which technically means it's a bond. Now, Zimbabwe's announced they're creating their gold-backed digital currency. What I did say about the Zim, why, in my opinion, an argument can be made that we're never going to be able to exchange that note because of the leverage involved. If it even goes at a penny, you're going to make a lot of money on that. There's 100 trillion Zim notes. Do the math on a penny at 100 trillion, So, but if the Zim ever does revalue, let's just say hypothetically the Zim came back at $1. Do the math on that. There's no way the bank can give you that money. There's no way. They're going to. They'd have to create some sort of an annuity or something. There's just no way. So, and I have Zim. I have a lot of Zim. Because it was so inexpensive. And, I said kiddingly, it was cheap enough that if it never goes, they make a nice paperweight, But like I said, with the leverage that would be involved, even I'll put it this way. I'll take a penny for my Zim right now. Right now, I'll take a penny.
No, I'll take $10. How's that?
Oh, well, of course I'll take more, but I'm just saying, if they said it's if I knew today, the only thing to be honest with you, if I knew it was going to come back at a penny, I still would have bought it because of the leverage.
Yeah, understandable. Hey, it sounds like things are looking really good for Vietnam and stuff. Are you seeing anything more as far as that going all at the same time?
Vietnam is interesting. Vietnam is trying to separate itself from China. Vietnam has a lot of things going for it. Now, it's been in the program rate for a long time, but I really think once the dinar goes, and remember, it's not just happening in a vacuum where the dinar goes so all these other countries want to go. It's in the context of the shift to Basel-compliant currencies. So it's just my opinion. I think when the dinar goes, I think a lot of countries are going to pop, and I just think the first one is going to be the dong.
I agree with you on that.
Yeah, and the dong could be. I think the Basel compliant rate for the dong is like 226 or something. So that's you got. We have. I guess I can say this. We have one client that has 500 million dong and 500 million dinar. So, it's nice to have that kind of money to play with,
Yeah, somebody's got some excess spending money, that's for sure.
Yeah. I was going to say, I mean, how many yachts can you water ski behind that? Well, this individual is very philanthropic person, so I've no doubt that a lot of that money, the majority of that money, is going to go to very good places. But that's just that's just a lot of cheddar. Wow.
Hey, last question. With regards to when the RV happens, okay, and you're talking about the BRICS, you're talking about possible our economy taking a dump on the market, things of that nature. Not to say the administration. I know how you feel about that. I'm just talking about our market, our stock market. I get the impression that even though the BRICS try to do what they want to do, it's going to take quite a while for them to make an impact on us. And so can you give feedback as to that, and also what you think the market will do right after the RV?
Yeah, well, remember, what's basically happening is the currencies globally are being equalized. So there won't be a preeminent global reserve currency because all currencies will have value. So
right.
The hegemony of the U.S. dollar is done not only because we have the BRICS regional countries that are going to utilize their own countries' reserve currencies, and a lot more countries want to enter the BRICS. It's also, unfortunately, because the United States, unfortunately, they basically went off the gold standard in 1971. They're using a Keynesian debt model, which means you print a lot of money, which devalues the money. That's what inflation isn't the increase in the intrinsic value of intangible assets. It's the decrease in the purchasing power. So we've destroyed our own dollar, and it's unfortunate that we did it to ourselves. We've destroyed the U.S. dollar, and it is what it is. Now, I think the dollar will make a comeback domestically because it's going to have to be backed. And because the United States has lost hegemony in terms of having its reserve currency, and also with the petrodollar, remember, people have to convert to the U.S. dollar to buy oil globally on the global market. Well, it's like when you go to the bank and you do your exchange and the bank gets a transaction fee. Well, when people had to convert to the U.S. dollar to buy gold, to buy oil globally, the United States Treasury got a little transaction fee. Well, that's gone now too. So we've lost that as well. But the dollar will recover, at least domestically, because like all other currencies, it's going to be commodity backed. But this is going to destroy the Keynesian debt model because they're not going to be able to just print money anymore. Because the Congress decides that they want to forgive student loans, so we need $1 trillion. They're not going to do that. They're not going to be able to do that. The amount of money that they're going to print is going to be based on the ability to back that with gold and other commodities. So that's another reason why the left isn't really thrilled with what's going on. And of course, the other reason is 10 million, 12 million dinarians, they're overnight millionaires. They're not going to vote for bigger government and higher taxes. They're going to say, leave us alone, understandably. So, the dollar will survive, but it will never be the preeminent global currency, in my opinion, ever again. And half of that's because of what we've done.
Okay. Well, Jim, I look forward to having 2 or 3 drinks on a little island somewhere with you and your family when all this happens. So.
Yeah, I'll be face down in a puddle somewhere, I'm sure.
All right, my friend. You take care of yourself. Thank you for your wisdom and all your friendship. I appreciate you.
Thanks, Eddie. Take care. Bye-bye now. Let's see. Our next caller is 209. I think I spoke to 209, but you're back.
Okay.
You
I
there?
don't really have any. Yes, it's Sheila again. I didn't have any
okay,
other
fine.
questions, so I wasn't sure I was still in the queue.
Okay,
But since
my bad.
I do have you on the, I was going to say, since I do have your attention, I'm just curious, what are the time frames right now for trust? If one was sent in, say, last week, what is your average time frame right now for someone that is purchasing a trust from you?
5 days at the outside. We're getting them out in 3.
Okay, great. So mine should be any day now.
Okay.
Thank you.
All right.
Okay.
What is your full name again? I'm going to look it up.
Sheila. It was Sheila D. Bohr.
Sheila. Okay, Sheila. That name's familiar, but I don't remember seeing anything. Hold on. Just give me a second.
Yeah, we spoke personally last weekend, one-on-one.
Oh, that's right. Yeah, I'm sorry. I've spoken to 300 people since then, so my mouth isn't what it used to be either. So I will. Give me your last name again.
I sent you an email just now.
Oh, did you? Oh, wow.
Yes.
Okay, great. Thanks very much.
Thank you.
Sure. Okay, our next caller is area code 301. That's 301. Go ahead.
Hi, Jim. It's Larry from Maryland.
Yes.
To follow up on the question about the banks, do we expect that these will be like the major, like Bank of America, large banks that are already dealing in currencies? For instance, I noticed Bank, they advertise you can online get currency if you're going to travel. These banks are already dealing in currencies, or it's not just any bank?
First of all, you're not going to be able to go to any bank that doesn't already exchange and do international currencies. And you're not going to go to a regional bank or a small bank. So, in my view, it's probably going to be a half a dozen banks that we'll have the option to go to. What I'm going to do personally is I'm just going to call the banks and say, look, my name's Jim George. I work with a firm called Trust Unlimited. We have a substantial amount of clients that have currencies. Give me a parameters on based on the amount of currency they have, what the exchange rate, what the fees are for the exchange and what the exchange rate might be. And then we're going to put that on our email. Now, I know that most of our people are going to run to the bank with their hair on fire to at least exchange some of their currencies. I understand that completely. We've been in this a long time. But I'm going to try to see what we can work out. So when you walk into the bank with our trust, they're going to be aware that we've already got a deal worked out, and you're not going to have to go through all the dog and pony show with them. But, again, it's going to be major banks. And remember, right now, our government's in the process of trying to centralize the banking. They're talking about waiving the insurance for the larger banks and making them whole, but not doing that for the smaller regional banks, credit unions, etc. So they're going to want to steer us to the larger banks anyway. My thing is I'm going to go to the bank. I'm going to negotiate the best deal I can, and I'm going to get the money out of the bank as quickly as I possibly can.
Right. And so when you're saying this, would you be giving us one of these talks, which of the, 5 banks that have agreed to work with us? Obviously, we go in on our own, like you said. And would we say it's Bank of America, for instance? Would you go into a regional office, or would you have to go to a larger office?
No, I'm sure you'd be able to go into an office. I mean, remember, the banks gather capital. That's their job. So they want to make it as easy as possible for you. So it would be stupid for a bank to say, okay, we're doing exchanges. Here are 10 locations in the contiguous United States. No, they're going to try to make it as easy as they can. Now, they're going to set up redemption centers. They might, but certainly they're going to, if they're one of the banks that's going to be involved in this, the understanding is that they're going to make it as easy as possible to get this done.
Ultimately, it's just currency exchange, like you said, right? I mean, it's nothing tremendous. It's just how they do it.
I agree. Yes.
Right?
Yes.
Okay.
Well, the only problem you're going to have is if you don't have proof of purchase. If you don't have proof of purchase, if you don't have receipts, that might be a problem. Or if you're going to the bank and you were gifted currency, the bank might want to see a copy of the purchase invoice for the currencies that were gifted. That's a possibility, but that's the only thing I can think of, because once again, the bank wants to do this. If you go in there with 3 million dinar and you exchange it just for a buck, $3 million. That's $3 million that's sitting in that bank that they have float on for 72 hours, worst case scenario for them. So, they want to do plus they hit a few keystrokes and they make 1% to 2% on the exchange as well. So believe me, the bank is chomping at the bit too. They want to get it done.
Okay. The other question with the Zim research I did, that Zim in 2008 ceased to exist. Is there an actual Zim currently that is being exchanged in?
No, technically the Zim, which is written on bond paper, was terminated, and theoretically the currency we have, we can't exchange. That's why I always say I'll be surprised if we get anything for the Zim. But on the other hand, it was extremely inexpensive, and the leverage involved in a 100 trillion note is so tremendous, that even a penny isn't just an incredible return. So, this is another reason why. I was going to say this is another reason why, when you purchase stocks, you tend to diversify. Well, when you purchase pre-valued currencies, diversify there too. I have 5 currencies. I know individuals that have more than that.
So if you actually went on Amazon and bought a trillion thing Zim, you might actually, you say it's low risk, of course, low chance, not risk, but low chance that it could, but that piece of paper could actually be the piece of paper that could revalue.
Yeah, yes.
Okay.
Yeah, I mean, of all the currencies I have, if I had to dump one, it would be the Zim. On the other hand, I paid so little for it that, the downside's virtually nothing. The upside's huge. So, if I have 5 currencies and I can exchange 4 out of the 5, that's like buying 5 stocks and having 4 of them take off. So,
Okay. Okay. Thank you.
Certainly. Bye-bye now. Our next call is area code 509. That's 509. Go ahead.
Hi, Jim. This is Art in Washington State. I want to say hello to you, and it's always a joy to be able to listen to your insight. One little anecdotal note with the Zim. I have a Zim as well, and the first note that I bought a couple whiles ago was $12 per 100 trillion, and now it's crazy. Totally crazy. Now it's gone up to well over $100. I think it's pushing $150 per 100 trillion. So based on that alone, there is some progress as far as the value of the Zim.
Well, but there's always another phenomena when you're investing. It's called velocity, and that is the price isn't based on, or the price is solely based on hope, on the fact that other people are purchasing it. It happens in the real estate market a lot when interest rates fluctuate. So velocity is a possibility as well. But like I say, the Zim to me is problematic, but like I've got 4 currencies I feel good about, and the 5th one is a Zim. So to be honest with you, if any one of them goes, I'm in great shape. If 4 out of 5 go, I'm thrilled. You don't get emotional about investments. You don't, you take your earnings and you don't look back.
Right, I agree. And all you can do is keep on keeping on, waiting for that to take place and get the best value at each.
The other emotional barrier people are going to have is they're going to go to the bank. Some are going to exchange some of their currency. Some are going to exchange all of it. And, of course, the value, could work like an IPO. For example, with the Kuwaiti dinar, it revalued, I think it was like $3.46, and it went up over $7. So people were buying it at $4, $5, $6, and $7. 2 weeks later, it was at $3.46. So some people are going to get burned, by getting in late and then losing. Other people will exchange. You exchange your dinar for $3.50, and then the next day you see it's $3.68 and you hyperventilate. So you can't do that. You got to say, hey, I bought 5 million dinar for $5,000, and I got 10 million or I got $15 million back for it. I'm not going to lose any sleep over I could have had 16.2 million. You know, and it's hard emotionally not to do that, but you really have to be disciplined about it. And once you're walking out of that bank and you're done, don't look back. You got what you want.
Right.
You have the rest of your life. You're financially secure. You can provide for your, you know, so I say, you know, thank Jesus, pay your taxes, invest wisely, help the poor, and you know, and live your life.
Yeah, this is all a gift. It's a blessing for us, and it's kind of like, you know, taking the money from the unjust and giving it to the just. Unfortunately, the unjust is still going to get some, you know, on the left. That's what I look at it. But the question I have is that, you know, following the RV and the redemption of the Zim, if that takes place, you know, you've indicated there's 3 states, the Montana, Arizona, and Texas, that are going to a digital system backed by gold. Now, live in Washington State.
There's actually now, not to interrupt you, but there's actually 26 states that are in the process of establishing their. This is really great because the federal government has finally gone so far that now there's a push to decentralize and say, well, if you're going to go to a digital currency to control us, guess what? We're going to compete. We're going to have a state digital currency. It's going to be gold backed, and there's going to be no credit score. So the states are pushing. What's really happening right now is we're really creating 2 countries, the red states and the blue states.
Yeah.
The blue states, the blue states are going to be high tax, high regulation. The red states are going to be lower taxes, lower regulation, more privacy. And people are, what are they going to do? They're going to go to the red states. So it's like a civil war. This is what's going to, in my view, this is what's the direction we're heading.
Right. Now, when you establish, say, Montana, because we're close to Montana, would you only use regional banks rather than a, you know, city bank or what have you there? Because are not the big, huge conglomerate banks, aren't they controlled by a central bank system then?
Well, they all are technically. But I always, assuming I have all of the services I need, I would always prefer to use a regional bank or a credit union. So, you know, let's say that the large and the regional banks in Montana are going to be utilizing the state gold-backed digital currency. So I don't live in Montana, so I go to Montana. I set up my bank accounts. I have credit card and debit card from those accounts. So I operate outside of the federal system. Now, the feds are going to come along and try to say, well, there's an interstate problem because you don't live in Montana, but you're trying to utilize the system. That might be another reason why all the other states say, oh, we all got to jump in on this, you know. But once again, if I live in a blue state that I have to operate through the central bank, and we don't know this is going to happen, but projecting into the future, I live in a blue state and I have to operate with the central bank digital currency, or I could move 120 miles to a red state and I don't have to put up with any of that crap. Well, you might want to move. I mean, people are leaving California and New York in droves because they're sick of the taxes and the crime. Well, they also don't want the people in their back pocket, you know, so that could happen as well. That's why I'm saying the blue states will lose it. They're going to lose this one.
Yeah, well, my wife and I plan on, or have been looking very seriously about moving to Idaho. The Spokane is within 30 miles, and there's beautiful country over there. And if Idaho is one of those that have are working towards establishing that digital currency that's asset-backed, that would be perfect. Now, the question is also, underlying question to that, we would keep the house here in the city of Spokane in Washington State and put it under a course of irrevocable trust. We could move physically, maintain that house, and have someone that we know personally move in and take care of it like as ourselves, and then still be able to uproot everything and find after we found a place in Idaho, correct?
Correct, because it's common law trust, which is valid in all 50 states. It's not statutory, so yes, you can do that.
Gotcha. Okay, but you would establish through the master trust a trust bank account in that state that you would move to
you could set up accounts anywhere you want, as many as you want, for any reason that you want. It's not a problem.
Wow. I will say, as you know, I have, before I was fortunate enough to obtain, your knowledge and Switch, we had purchased another trust, and they would only give you the opportunity of, say, 3 banks that you could set up, and they had to okay it.
That's because there was evidently some, behind-the-scenes fees involved. We're not involved in any of that. We are providing the trust to anyone that's interested in establishing the trust. We make nothing else beyond that. As a matter of fact, once an individual is paid for their trust with us, and I didn't even get into the pricing today because there were so many other things on my mind. The only other cost for this trust lifetime would be the paralegal fees involved in making changes to the trust or funding the subtrust. The principals of the trust, the creators of the trust, certainly not. We don't make anything else. I mean, I'll be gone.
How many after the fact? I brought what you just mentioned brought a question up. Following the exchange process, and you start putting your vehicles and adult children's homes in the trust, and that setting up that way, you run out of trust. And we want to purchase more.
No, the initial package is 10 trusts with 8 standard subtrusts, but you can have as many subtrusts as you want.
How much is there an additional $300 per subtrust?
Okay, let's say after the RV, you called us and said, hey, look, I bought a beach house in Hilton Head Island. It costs $300,000. I want to create the Hilton Head Island Real Estate Trust. Well, the paralegal fee would be somewhere between $150 and $250 to set up the subtrust for that home. But let's say that you already funded all of the 8 initial subtrusts and you still need additional ones. Well, for roughly the same cost, $150 to $250, at least that's the price right now, you can create additional trusts for whatever else you need. So if you can protect a $300,000 beach house for between $150 or $250, that's a hell of a deal.
You ain't said snack bar. I tell you.
That's just the paralegal fee. We don't get anything out of that. That's merely to pay the paralegals to prepare the document.
Okay, great. Now I have one kind of an unfair question, and I can understand where you would go with the answer and why. But I say, there's no way that we can divest ourselves from the other company. But is it okay? How would I use both? Bottom line, how would I be able to use yours primarily, but then I've got this other one kind of a strap hanger hanging around?
Well, you probably could. You have the ability. Again, there's probably paralegal fees involved, but you could amend the trust. You might even be able to, like maybe name one of your children as co-settlers, and then let them utilize the trust.
Okay, that the other, gotcha. As they benefit. You say that again. They're not co-beneficiaries.
Okay.
They would be.
I'm assuming you have the ability to amend the trust for paralegal fees, whatever they charge. I don't know who this firm is or what they're doing. But let's say you and your wife are settlers. You might want to go in and say, look, we want to remove ourselves as settlers and name our son. They might go for that, or they might charge a smaller amount and say, well, ordinarily it'd be a $150 fee to make that amendment, but since you're really radically changing it, for $500 we'll do it. So you might be able to negotiate something with them and transfer it to somebody else, or you could try to use it for a business trust. That might be. I have to see the document to go beyond that. But there may be something you may be able to negotiate to be able to utilize it in some other fashion.
Right. It wouldn't be fair until really functional until after the fact of the RV to be able to do anything. So that's the only way you'd have any leverage.
If you have our trust, you're going to go through the process to do everything you need to do, and then you can revisit that other trust. You're going to have the time and the money, and think something.
Fair enough. Thank you, sir. I appreciate you, and again, well done. And by your leave, sir.
Thanks a lot, Art. Take care.
Bye-bye.
Okay, our next caller is area code 978. That's 978. Go ahead.
Hi, Jim. It's Leslie from Massachusetts.
Yes.
And there is one aspect of this that is really confusing to me, and I'm really hoping that you can provide the clarity. So when this all happens, I've heard you say before that, say, a 25,000 dinar note in Iraq then becomes a 25 dinar note. So how can they do that in country like that, but outside of the country, it's 25,000 dinar?
Well, the way they're doing it is they have to take the currency to the bank, and the bank will give them the new national currency, so they won't be utilizing the provisional 3-0 currency. The situation with us, this is why they were collecting the zeros. This is why when we go to the bank, we have to provide that in other words, we're not nefarious players. I'm an American citizen. I went to XYZ company. I purchased the provisional 3-0 currency dinar for X amount of money. Now I'm coming to the bank to exchange it pursuant to Executive Order 13303, which allows me to participate in the profit earned from the liberation of Iraq. Now, they can try to renege on I guess theoretically they could try to renege on the deal, but that's not going to fly with the U.S. Treasury. And I'm quite sure that part of the arrangements that they have are that when we go to American banks to exchange our provisional 3-0 currency, remember, this isn't hurting Iraq at all. We're getting U.S. dollars for it. Iraq's not giving us anything. Our government's giving us money for it, and the respective countries are. They then have that provisional 3-0 currency. It'll be retired through the Central Bank of Iraq for whatever deal has been made between the respective central banks of each country and Iraq. But Iraq's not doing anything. Our government's given us is honoring the 3 zeros, not Iraq.
Okay. All right. So yeah, that's helpful.
Iraq's not giving. If we're 3-1, Iraq's not giving you $3 for every dinar. Our treasury's doing that. Iraq's not giving you anything.
So why then would the U.S. allow this currency to be available to us here to purchase for investment reasons if they don't want us to have it?
Because it was initially established under the Bush administration, and then Obama and his buddy Maliki didn't want to see this happen. Let me break it down this way. If you're on the right, a hard right, I'm not talking about the center. Hard right is sovereignty of the individual. Hard left is the collective and government. All right? We want to exchange the money. We want to do what we want with it. The left doesn't like that. They don't want overnight millionaires because they won't vote for bigger government and higher taxes. It's no more complicated than that. That's why we should have a federal sales tax, but we don't. We have an income tax because it's a control mechanism. They can adjust it. Biden just went out there and gave a speech about how horrible it was that certain corporations aren't paying any taxes. Well, why aren't those corporations paying taxes? Because they're expanding their business, which means what? They have to hire people to build and construct. They're hiring more employees to sell their product. Those people all get salaries. Those salaries are taxed. The corporation may not be paying a tax, but by expanding and increasing their base, increasing their product, they're increasing the tax base. But that's not how the kleptocrats on the left operate. They're not trying to grow the private sector. They're trying to grow government. So, they don't want us to have it. It's no more complicated than that. They're trying to destroy the middle class right now. How do you destroy the middle class? Higher taxes and inflation. That's right out of the Marxist handbook. That's how you do it. You have to get rid of the middle class. They want us dependent. And you're not going to be dependent if if you've got sufficient wealth to live the way you want to live, do what you want to do. All basically we want is to be left alone, and they can't even do that. So that's my political, soapbox lecture for today.
All right, Jim, I appreciate the information, the clarity, and appreciate really you for all this time you spent in educating us along the way and the updates every week. I greatly appreciate it.
Well, thanks for your kind words. You take care, Liz.
Thank you. You too. Bye-bye.
Bye-bye now. Well, Leslie was our last caller for this afternoon. Again, thank you for listening to the call. The things we've discussed are of interest. I hope you will click the subscribe button and share it with other like-minded individuals. Once again, I would strongly suggest if the things we've discussed are of interest, whether you're a Dinarian or not, contact us to get our initial no-obligation package. It does contain everything you need if you wish to proceed, but again, you're under no obligation to do so. You can request this information by email or phone. Again, our email address is trusts with an S, unlimitedllc@gmail.com, and our phone service is 307-274-4122. Our next call is next Wednesday. Certainly if something of a dramatic nature were to happen between now and then, we'll try to get out an emergency email and schedule an emergency conference call. But failing that, we'll be back next Wednesday, noon Eastern, 9 a.m. Pacific. Thanks for listening and have a great week. Bye-bye now.